So, someone told me that there was this bear market going on because of a coronavirus, but what does that even mean? What's up, guys? My name is Mateo Hall, and I just turned 18 and just had to start up this here YouTube channel about finance. So money's been this thing of interest for me for a really long time. I've always tried to, as of recently, convince my friends of why we should be investing already. But unfortunately, so many people my age aren't worried about investments yet because they think we're so young and retirement's so far away. Which is why I now bring up the case that the S&P 500 is down 30%. If that's not the time to buy right now, then I don't know what would be. Honestly, I've been putting a couple $100 inside some mutual funds in the past day, next week. And I'm trying to encourage a ton of my friends to do the exact same thing because it's a great time to buy. Now, obviously, I hear those of you that have been invested in the market for a really long time now. Those years of profits just completely wiped away in about a month. That's terrible, and I hear that. What I'm trying to advocate against is those panic sellers that are trying to cut their losses right now because they see this huge decrease in the market and they're worried that their investment's going to turn to nothing. But if you look at the long-term capital gains of this is a great time to be in the market. Not only is it a great time to be in the market, it's a great time to be buying into the market right now. Now, obviously, I say that because I don't have anything invested right now, so I haven't lost anything. And since you're a smart individual listening to these finance channels on YouTube, you've probably been hearing the exact same thing from a lot of large personalities. Now, except there's one thing that they're probably not pointing out. There's people out there right now that are dumping an exorbitant amount of money into the market, but they still don't have a safety cushion. Let's take an example here. You buy into the stock market on March 11th. You see that the S&P 500 is down over $600. You think that now is a great time to buy and that it can't be getting any worse from here. 2 days later, you get laid off from your job because of Corona. Let's say you work in retail or something else. Now you don't have an emergency fund and you've put nearly all of your money in the S&P 500. You're thinking, oh, it's a great time, it's all right. The market's hit rock bottom. Now it can only go up from here. If you look at the next couple days, you're gonna run out of cash reserves if you don't have that emergency fund. It's said that over 40% of Americans can't handle a $400 emergency. If you get laid off here, and then your car breaks down, you're forced to sell all of those stocks that you think you bought at a huge discount now at a loss. Now, let's take another scenario. We'll take the same graph of the S&P 500, and we'll assume that you're not rushing into this. Instead, you realize that you don't yet have an emergency fund, and you don't want to buy into this like crazy. So, you spend time starting with an emergency fund, building up $1,000 right there for anything that could happen. Meanwhile, you're slowly putting money into an S&P 500 index fund so that you can go in without all of the risk of fully diving into it head first. Making $25 an hour, you'd be making $1,000 every week. Let's say that you're able to put aside $100 a week for your emergency fund. This will slowly build up your emergency fund, and it won't force you to spend every little bit of it going in at once, and you'll still be able to capitalize on the decline of the S&P 500 right now. Meanwhile, you're also pinching pennies, you're paying attention, you look at your personal capital account daily and mint, seeing where all your frivolous spending is going. So you're also able to put $150 inside of the S&P 500. You do this averaging out, putting about $22 a day if you were to count that into these mutual funds. This would not only let you dollar cost average among this decline of the S&P 500, but it's also building up your emergency fund for when you really need it. But what do you put all of that in? Well, I can't tell you exactly what to do. This is not financial advice. Well, what I've personally have been looking into these past couple of weeks is VTSAX, VFIX, and VOO. VTSAX and VFIX both start with at least a $3,000 investment. That's where the majority of my money is going to be going once I decide to fully go into the market. Right now, I'm playing around with VOO, seeing how everything works. I'm no expert right now. I don't claim to be. Everyone should be investing one way or another. Whether that starts with VOO, with just messing around with $200, seeing how everything works, or buying some AT&T stocks for your first commission. What's really important is understanding how the market works and having an emergency fund built up in case anything happens. So yes, is it a good time to buy right now? Of course, but is every situation also different? Yes, you need to assess where you are at right now financially and see if it's the smart move to put all of your money in somewhere that isn't as liquid as a high interest savings account, for instance. There's a risk in any investment, especially right now in the bear market that we're in. We don't know if this is the bottom yet. I'm recording this and we've seen the S&P 500 hit 2,350 is the lowest I personally saw. I believe it's gone even lower than that before, and who knows, by the time I've gotten this video out, maybe it's jumped up 200 points. Or Goldman Sachs is predicting that it could bottom out around 2,000 still. So there's time to get in on this. Don't worry about missing your chance in the market just because you're not attacking this so aggressively right now. What people need to focus on is the greater whole of their financial situation. Yes, of course, investing is a major part of your finances, but another that many people don't look over is budgeting and having that emergency fund. If you get nothing else from this video, then at least realize that every situation is unique. So you can't be listening to Billy Bob on the internet about how exactly to spend your money. Don't even listen to me about how to spend your money. What the aim of this channel is to give you the resources and the availability to see how many different outlets there are and how to more effectively use your money. I've told you 3 examples with VTSAX, VFIX, and VOO in this video, and I haven't decided what I'm going to do either yet on those. You need to be doing some of this research on your own. I aim to give you resources, but I can't tell you exactly how to use them. I name dropped a couple of companies earlier with Ally Bank, Personal Capital, and Mint.com. Those are all excellent sources to help track your finances and help grow as an individual. I'll also have my Webull linked down in the description below. If you use that link, we both get 1 free stock. So you may as well, if you're planning on investing with them, we both make money with that. I plan on making videos on other resources such as Robinhood, Webull, and Ally Bank in the future. But until then, go ahead, check the description for that Webull links. We both get a free stock, and smash that like button if you enjoyed the video.